Hey tech enthusiasts, you've tuned in to the Tech Stocks Daily Podcast, your daily dose of all things tech stocks, fresh off the digital press. In today's Tech Roundup, we're diving into Adobe's latest market roller coaster. Adobe Inc., the giant behind your favorite digital creativity tools like Photoshop and Illustrator, just had a major spotlight moment. And unfortunately, it wasn't because of skyrocketing stocks or groundbreaking product launches. Let's peel back the layers of this multifaceted story. After Adobe released its fiscal first quarter earnings report, the tech community buzzed with a mix of anticipation and anxiety. While Adobe managed to surpass Wall Street's expectations in both revenue and earnings, with a commendable 11% revenue growth pushing figures to $5.18 billion, and adjusted earnings per share climbing to $4.48, it was their forward-looking statements that dimmed the excitement. The company's guidance for the coming quarter fell short of analysts' expectations, forecasting revenues between $5.25 billion and $5.3 billion, slightly missing the targeted $5.31 billion mark. This anticipated slowdown to a 9 to 10% revenue growth rate, and the alignment of the next quarter's earnings with present consensus estimates sparked concerns over Adobe's pace and positioning in the rapidly evolving tech landscape, notably in the realm of artificial intelligence. We're witnessing a tech titan under pressure as Adobe grapples with heightened competition, particularly from entities leveraging AI advancements. Adobe's ambitious strides in integrating AI into its services, highlighted by the integration of its proprietary AI model, Firefly, showcase its commitment to innovation. Yet despite these efforts and the promise of ramping up monetization of AI features later in the year, the immediate market reaction was less than forgiving. Shares of Adobe tumbled 14%, marking its most significant slump since the previous year. This downturn didn't just affect Adobe, it dragged down industry comrades like Microsoft. Adobe's challenges are illustrative of the broader tech ecosystem's dynamics, where AI is increasingly viewed as a double-edged sword. On one hand, it presents opportunities for groundbreaking enhancements across product portfolios. On the other, it's a battleground where newcomers and established giants alike vie for dominance, and where the pace of AI monetization can significantly influence investor sentiment. Adding to Adobe's turbulent week was investor apprehension regarding the company's strategic direction amid AI's ascent. Despite unveiling a $25 billion buyback plan, skepticism loomed over Adobe's AI roadmap and its perceived slow embrace of AI-driven opportunities. This sentiment was further fueled by a perceived lack of clear advantage from recent AI innovations, affecting Adobe's robustness against competitors and questioning its ability to maintain its stronghold in the digital creativity market. All eyes are on Adobe as it navigates these choppy waters. With the tech sector at large eagerly watching, the company's next moves will be pivotal in reassuring stakeholders of its resilience and foresight in an increasingly AI-centric world. Adobe finds itself at a critical juncture, tasked with not only sustaining its legacy of innovation, but also proving its adeptness in harnessing AI's potential to secure its future. Google grabbed headlines today for a couple of significant reasons, reflecting both the ongoing shifts in its product offerings and its regulatory challenges. First off, Google made a notable move in its product lineup by shutting down Keen, its experimental social media platform launched in 2020. Keen, fostered under Google's incubator Area 120, aimed to innovate the way people explore and share their interests online through the creation of virtual idea boards. Despite the intriguing premise and utilization of machine learning for personalized content recommendations, Keen hasn't seen updates since December 2021 and will officially be discontinued on March 24, 2023. Google encourages users to download any data they wish to keep before this date. This closure is part of a broader trend at Google, which includes the shuttering of other services like Google Play Movies and TV and Google Podcasts, and a significant layoff of over 1,000 staff members since January 2023. Secondly, Google is under the scrutiny of the Competition Commission of India, which initiated a probe into its Users' Choice billing system related to the Play Store. The CCI believes that Google may have violated segments of the Competition Act, leading them to demand a detailed investigation to be completed within 60 days. This inquiry comes after Google's enforcement of its UCB system, which led to the removal of apps from several developers, causing a temporary dispute with Indian app developers about billing policies for in-app purchases and subscriptions. Google's Play Store charges a 15 to 30% fee for in-app purchases made using its billing system, but offers a reduced commission for those using third-party billing options. These developments show Google navigating through both the evolution of its product ecosystem and responding to legal and regulatory challenges. The closure of Keen is a reminder of the transient nature of tech experiments, while the CCI probe underscores the global scrutiny tech giants face over their market practices. Oracle grabbed headlines today with several noteworthy developments, indicating its solidified stance and growing influence in the tech world. At its heart, Oracle's journey exemplifies a transformative adaptation from a legacy database software provider to a pivotal role in cloud services innovation and the burgeoning field of artificial intelligence. Here's what's stirring the buzz. Over the past decade, those who invested in Oracle have seen remarkable returns. Specifically, a $1,000 investment in Oracle back in 2014 would be valued at $3,338.56 today, marking a gain of 233.86%, excluding dividends but including price appreciation. This performance trumps both the S&P 500's and Gold's rise over the same period, spotlighting Oracle's significant growth and its successful navigation through the tech market's vicissitudes. Adding to the investor enthusiasm, Oracle's cloud computing and strategic cloud applications, along with its autonomous database and Oracle Cloud Infrastructure, have experienced robust adoption. This growth is notably bolstered by Oracle's Gen 2 Cloud, which attracts an AI-centric clientele with its high performance, bandwidth, and low latency networks. Despite the uncertain economy and stiff competition in cloud computing from giants like Dell, IBM, and Microsoft, Oracle's sustained investment in cloud infrastructure signals a promising roadmap for future growth. In the spheres of Wall Street and big money investors, Oracle's stock has become increasingly attractive. Recent trading activities show a discernible bullish stance among investors dealing with hefty sums, directing significant attention to Oracle's options. The sentiment in these circles is largely positive, with a tilt towards an anticipated upward trajectory in Oracle's stock value. The substantial financial betting on Oracle hints at an insider confidence or undisclosed developments that might soon unfold. Furthermore, Oracle's recent strong earnings report has garnered positive upgrades from analysts, reaffirming confidence in Oracle's ongoing transition to cloud services and its potential to capitalize on the adoption of generative AI tools. An influx of buy or equivalent ratings from over half of analysts tracking Oracle stock underscores the tech giant's resilience and adaptability. Such recognition from the analyst community and robust demand for Oracle's cloud infrastructure, exemplified by over $80 billion in remaining performance obligations, details a vibrant outlook for the company. Oracle's move towards cloud services, coupled with its innovations in AI, positions it for a new chapter of heightened growth, profitability, and free cash flow. In essence, Oracle's current story is one of triumphant transformation and strategic foresight. Its pivot towards cloud computing and AI, though met with initial challenges, now serves as a solid foundation for future explorations and expansions in the tech landscape. Today in the tech universe, Microsoft grabbed headlines with its groundbreaking announcement of a new artificial intelligence assistant, Microsoft Copilot for Security. The buzz around this launch propelled Microsoft stock to sky-high levels, marking a new peak for the tech giant. As a delightful surprise to investors and tech enthusiasts alike, this innovation not only fortified Microsoft's position in the market, but also signified a major step forward in the battle against cybersecurity threats. Microsoft Copilot for Security stands out as more than just an AI assistant. It's a beacon of hope for security and IT professionals drowning in an ocean of cyber threats. By pulling from a massive database of threat intelligence, Copilot for Security delivers custom insights and actionable recommendations. Whether you're dealing with urgent queries or just need a second set of AI eyes on your security landscape, Copilot for Security is your go-to, handling prompts and churning out responses in 8 languages. This multilingual maestro goes the extra mile with a user interface that caters to 25 languages, making it an inclusive tool for global users starting April 1st. The introduction of Copilot for Security is seen as a key driver for growth in Microsoft's cybersecurity segment. This move comes at a time when Microsoft's enthusiasm for generative artificial intelligence is already paying dividends, catapulting the company past Apple in January to become the world's most valuable company, with a market capitalization exceeding $3 trillion. Enthusiasm from Wall Street is palpable, as evident from Microsoft's stellar brokerage recommendations. Sporting an average brokerage recommendation of 1.14, based on the analysis of 37 brokerage firms, it's clear that confidence in Microsoft is soaring. With 33 strong buy and 3 buy recommendations, the optimism is hard to ignore. Analysts have pegged Microsoft's average price target at $4.4506, hinting at a potential increase from its last closing price. Microsoft's stock surge and the optimistic outlook for its AI-driven endeavors, particularly in cybersecurity, make it a tantalizing option for investors and technology aficionados. The company's strategic moves in AI and cybersecurity are not just elevating its market cap, but are shaping it as a torchbearer in the tech world, navigating through the complex terrain of cybersecurity with ease and innovation. In today's tech news, Apple grabbed headlines for multiple reasons, showcasing the diverse fronts on which the tech giant operates. First on the list, Apple's strategic push into artificial intelligence is undeniable, as it acquired the Canadian AI startup, Darwin AI. This move, among others, emphasizes Apple's intensified focus on generative AI, aiming to incorporate more AI technology directly into its devices instead of relying solely on cloud-based AI computations. Another headline bears Apple's financial maneuvers, as the Cupertino-based company agreed to settle allegations of fraud, denying any wrongdoing but opting to pay $490 million to investors. This settlement addressed accusations stemming from CEO Tim Cook's alleged misleading statements in 2018 concerning the company's sales outlook, which later significantly impacted its share prices following a revised quarterly revenue forecast. Lastly, Apple seems to be broadening its horizon beyond health tracking with its Apple Watch technology. A series of patent filings suggests the company is exploring an integration of a variety of sensors, including environmental ones not primarily focused on health. This move, coupled with innovative ways to interact with devices through physical movements, indicates Apple's intention to expand the functionality and interactivity of its wearable technology further. This flurry of activities around Apple, from its deep dive into AI, legal settlements, to potential new directions for the Apple Watch, paints a picture of a company that is both aggressively pursuing innovation and dealing with the complexities that come with its massive scale and influence. So, what do you think about Apple's aggressive moves into AI and their legal and technological maneuvers? Are these the right steps for the tech giant, or is there a different path you believe they should take? Drop your thoughts and comments below. Let's get the discussion going. The overall market sentiment today showcases a mixed bag of strategic shifts, innovations, regulatory challenges, and investor responses across leading tech giants. Starting with Adobe, the story isn't as bright as one might hope. Despite surpassing Wall Street's expectations with an 11% revenue growth in its most recent fiscal quarter, Adobe's forward-looking statements fell short of analysts' expectations, sparking concerns over its pace in the tech landscape, especially in the realm of artificial intelligence. This resulted in Adobe's shares tumbling by 14%, indicating a tense atmosphere around the company's ability to keep up with AI advancements and heightened competition. Google is juggling between the evolution of its product ecosystem and regulatory challenges. The shutdown of Keen, an experimental social media platform, reflects the company's ongoing adjustments and the transient nature of tech experiments. Additionally, Google faces scrutiny from the Competition Commission of India over its Users' Choice Billing system, underscoring the global regulatory challenges tech giants face, which undoubtedly influences market sentiment. Oracle, however, stands as a beacon of investor optimism amidst a challenging landscape. The company's remarkable return on investment over the past decade and its strategic adoption and implementation of cloud services and AI have not only contributed to positive upgrades from analysts, but also attracted significant bullish sentiment from big money investors. This indicates a strong confidence in Oracle's future growth and its role in the technology sector's transformation. Microsoft is riding high on the announcement of Microsoft Copilot for Security, an AI assistant aimed at bolstering cybersecurity. This innovation, coupled with Microsoft's continued embrace of generative AI, has led to a surge in stock levels and reinforced its position as a market leader. The optimism is reflected in Wall Street's stellar brokerage recommendations, suggesting a strong belief in Microsoft's growth trajectory and strategic direction. In summary, while companies like Oracle and Microsoft are witnessing upbeat responses from the market due to their strategic innovations and investor confidence, others like Adobe and Google are navigating through more turbulent waters, marked by competitive pressures and regulatory challenges. The overarching sentiment is one of cautious optimism, with a keen eye on how these tech giants pivot and adapt in an ever-evolving technology landscape. Considering the trends and shifts outlined in today's tech news, the market next week is likely to be influenced by a combination of strategic innovations, regulatory developments, and investor sentiment towards these movements in the tech industry. For Adobe, the coming week might involve a period of reassessment and recovery. After the recent drop due to its less than optimistic forward statement, it would not be surprising to see the company making efforts to reassure investors and analysts about its strategies in AI and competition management. Depending on the effectiveness of these strategies, Adobe may either begin to recoup its losses or could face further scrutiny if the market remains unconvinced. Google's situation could unfold in two main directions. First, the regulatory challenges it faces, especially in international markets like India, are bound to keep Google on its toes, possibly affecting its operational strategies and market performance. Secondly, the closure of projects like Keen may be seen as a positive, focusing on core services and innovations that promise higher returns. Keeping an eye on how Google navigates through these challenges will be key next week. Oracle seems poised to continue its momentum, thanks to strong investor support and confidence in its strategic initiatives, including AI and cloud services. Unless there are dramatic market shifts or unforeseen company-specific news, Oracle's stock might continue to experience stability or even growth. The technology and investor communities will likely watch closely for any announcements or strategic partnerships that could further boost Oracle's position. Microsoft's trajectory appears to be upward, driven by its innovative offerings like Microsoft Copilot for Security and its bullish stance on generative AI. Given the positive market response and ambitious investments in AI, Microsoft is expected to maintain, if not enhance, its market position. However, the tech giant would need to continually innovate and steer clear of significant regulatory hurdles to keep the momentum going. Overall, the market next week is poised on a delicate balance of innovation, regulatory dynamics, and strategic positioning within the tech industry. Companies that demonstrate agility, foresight, and resilience in the face of challenges are likely to fare better. As always, external factors such as geopolitical developments, economic data releases, and broader industry trends will also play a crucial role in shaping the market's direction. Enthusiasts and investors alike would do well to stay perceptive to these broader nuances as they navigate the week ahead in the tech landscape. Today's tech market activities present a mixed landscape shaped by competing narratives. Strategic evolutions, regulatory hurdles, and investor sentiments painting a complex picture of both challenges and opportunities. Adobe's facing a rocky path with its recent performance raising questions about its AI strategy. Google, on the other hand, is dealing with the dual pressures of regulatory scrutiny and the need to streamline its offerings. Oracle emerges as a beacon of optimism, riding high on investor confidence in strategic cloud and AI implementations. Meanwhile, Microsoft continues to bolster its market leadership with innovative AI-driven solutions, indicating a strong forward momentum. In essence, while the market has seen its share of turbulence today, there's also a clear drive towards innovation and strategic recalibration among tech giants, a testament to the dynamic nature of the tech industry. Don't forget to like, subscribe, and share this video with others who love to stay ahead in the tech game. Join us again on Monday for another round of the latest and greatest in tech news. Wishing everyone a fantastic weekend ahead.